What's up, my crypto legends? In this episode, we're taking a look at the Bitcoin price on the daily. I want to explain how this is the most important level here, the last lower high that Bitcoin needs to break on the macro to shift here and go into a massive bull run in the next coming months. Also, we're taking a look at the lower time frames to take a look at some major levels, potential patterns to see what could happen in the next coming days. And also, we're taking a look at the SP 500. There is something very important that I want to explain on the SP 500. There is a possibility in the coming weeks it could go as high as 4,300 points. I'm going to do some Elliott wave theory, some counts here with some corrections, so make sure to stay tuned in this episode. Hi there, Andy here. Welcome back to another episode of Bitcoinsensus. If you are new to the channel, make sure to subscribe. Daily TA on Bitcoin crypto, also do live streams to connect with the community. I am not a financial advisor. Do not buy or sell anything that I say, and if you do so, do your own research. And let's dive in here straight into the chart, guys, because what I want to explain here on the daily is this major level over here. Till the price does not get above successfully this level over here, which is 25.2k, then we are still in a bearish macro trend. You might ask yourself, why haven't we been breaking here the last lower high levels right over here? Well, no, these are not the last lower high macro levels. The last lower low here before creating this one was right over here. This was in June of 2022. Last lower high was this one. You can see the price action in September and October, of course, not creating a lower low. So this is still the macro lower high over here. Then we create a lower low, as you can see on the price action. So before this one happened, the last lower low was this one. So the last lower high was right over here, okay? Just a quick update on this, guys. Of course, very, very simple. This is why we are still in a macro bearish environment. This is still a lower high on the macro. Something that we need to pay attention. As soon as the price breaks above this level, of course, I personally will be shifting bullish on the macro. I think there would be many months ahead of bullishness, and whatever type of correction happens will likely be a higher low right at this range. If we were to have that breakout, we'll be analyzing that if it were to happen, of course. So far, we are below this range, guys, and for me, this is massive resistance that we are going to take a look here on the lower time frames. Right over here, we can see this consolidation that we do have in between 22.5 and 23.6 approximately at this range. Something similar happened about a week ago, and we had a blast off to the upside. Is this going to be the same scenario where we're going to blast off and come and test this $25,000 range? Well, this is something that we need to pay attention, guys. Overall, we are at resistance. I am still in the short position, almost got stopped out at break even here, as you can see, just by a few dollars yesterday. Now, what I want to explain here, I'm going to try and hold this short position, the rest of the short position, of course, to see if we are going to get that major correction, guys. This is what I am waiting for. For me, it is easier to detect here a resistance zone after a major pump and try and get into that correction with good risk management than trying to long this range over here after a huge massive pump that we have had for the last couple of weeks. I cannot long this range, guys, even though we are probably going to hit 25k in the next coming days. Overall, what I want to spot here are the resistance zones for that big major correction, all right, that can give me those massive gains. So right away here, so far, so good. We can see that naked point of control from the volume traded here in between July and August. This was mentioned. This is this pink horizontal line right there. It was also the 50% Fibonacci retracement, okay, from this pivot high from May of 2022 to the low here from November. We can see that we're just hitting that 50% Fibonacci correction at this range. So right now, it is resistance on the macro scale, okay? We've got a lot of resistance. We've also got that monthly level that is massive resistance, guys. If we just go here to the monthly chart, we can see that monthly close here and open from the July and August months, okay? We can see right there, we just tapped that level, slightly went above it and below it. This is why I do think that this month is very unlikely to close above $23,300, and we're just a few $100s away, guys. We've only got 3 days left for this monthly close, and I think we are likely to close below this level, and that for me is going to be a confirmation that that big major correction next month in February is likely to happen at least sub $21,000, and this is something I'm going to explain right away, of course, on the lower time frames. Why so low? Well, if we do take a look at Elliott wave theory here from the ultimate low level, okay, as you can see right here at this range in November of 2022, we can see the first impulsive wave here, and then the second wave creating this higher low. The question is, are we still in this third wave and we haven't created the fourth wave? Well, I don't care if this is still part of the third wave or this right over here was the third and this is the fourth and this is the fifth. But what I do know that correction is likely to happen, and I want to spot those big support levels and the likely Fibonacci retracement that will be hit, and that is the 382, of course. The 382 Fibonacci is the most common retracement to be hit, okay? It's hit over 70% of the times when you have an impulsive move. So if we go from this low to the highs right now, the highs that was created, the 382 is at the 20,921. It's the most common retracement from impulse likely to be hit. And all of this, guys, is a huge, massive impulse. Has this got enough steam to continue and break here the macro last lower high? This is the question that I have looking at the analysis, guys. I think that we do not have enough steam in the next coming days or next week to actually break above $25,000 without having a healthy deep correction. Of course, once that healthy deep correction happens, I will be taking a look at some major levels. I will be looking at the 382 50% Fibonacci. This is in between 20K and 20,900 range. We also got a huge monthly level right over here that should be acting as support in February. We can see right over here those monthly close and opens from October and November. So it does make sense that we could have a pretty sharp correction here by next month, okay, in February. Then potentially the month in March could be insanely bullish, and we might have some price action to the upside. This is why we'll be analyzing the situation here the next coming days and weeks to see what happens. Overall, still think that we are unlikely to break above $25,000 in the coming days before having a relatively deep correction, even going below 21K levels, okay, at least to that 382 fib level from this impulsive wave. And also we have a huge zone of consolidation. This was created here the last week of October, first week of November. We've got that monthly level and weekly level. We got the 382 50% Fibonacci range. This should be that zone where we could potentially get an epic bounce, guys. I will potentially be looking for long positions at this range, depending on what type of consolidation we do have at this range. I will be looking for a potential long position because potentially this would be the fourth corrective wave, and we might have another impulse to the upside to try and break $25,000 on the fifth wave. This is only my theory. This is the only theory that I think that could happen in the next few weeks, guys. One of the reasons why I think that after a potential deep correction, we could pump above $25,000 is because of the stock market, guys. Remember, if you want to trade stock market, oil, gold, natural gas on Prime XBT, there's an insane bonus to be claimed, up to $7,000 worth of bonus. You get 7% added to your deposit using Bitcoinsensus 50 as a promotion code for buying power. You can use crypto as collateral to trade the stock market, such as Bitcoin, Ethereum, USDT stablecoin. On Bybit is my favorite one to trade cryptocurrency, of course. You get $30,000 worth of bonus depending on what you deposit at the reward sub. So make sure to check out that, guys. You got an insane bonus still going on Bybit, my favorite platform for trading crypto. Taking a look at the S&P 500, guys, I just want to go through Elliott wave theory. I just want to show you how there is a possibility that we could even claim the 4,300 points. Of course, if this does happen, I do see Bitcoin attempting to break above $25,000 if the stock market is going to be bullish here potentially in the coming weeks ahead. Of course, we could have a slight correction bringing Bitcoin down, but overall, if we do see the stock market trying to hit this range, I will still be extremely bearish. I do think that this will be a massive bull trap in my personal opinion, as we are not breaking here the macro structure, okay? We are above the trend line, but we're not above the last lower high macro structure, which is this one, okay? I'm going to give you that brief explanation here, how this pumpy action to that level could be the last range and get that epic drop, okay, to come back down and claim the lows, okay? It's just a theory here, and let's just talk about it on this episode. So right away, let's just go with Elliott wave theory, guys. But this is, this is very, very complex, because from the all-time high, we could go to this low, to this high, then this one right over here, then this one, and then this one. And you might think to yourself, hey, but on Elliott wave theory, okay, the third wave is the longest, right? We can see it right over there. But the fourth wave could not retrace behind the first wave impulsive to the downside, right? In this case of the downtrend. So the fourth wave should be ending round about the first wave, not well above, okay, the first wave. So there's something not quite right here with this count, Elliott wave count. But if we do take a look at this being the first wave, right? And this one right over here being the third wave, and this one right there, the fourth wave, is about finishing at the first wave count here, then it does make quite a lot of sense, guys. And let me just quickly talk about this, because right over here, this could easily be a flat ABC correction, okay? Let me just get the ABC count right there and talk about this. A, B going below the 0 point, and this could happen, guys. This is at a flat ABC correction where the B point goes below the start of A and the C goes above the A point slightly, okay? Flat ABC correction, and then you can see we start that next move to the downside. Something very similar happening after the third impulsive wave. We know that in the corrective wave there are 3 waves. So if we take this as the low, we can see this 1, 2, and 3 right over here being the start of the 5th wave and the end of the 4th wave, okay? So that is a very high possibility, as this 4th wave is basically ending right round about that first wave move down, as you can see on the chart, then having this 5th wave to the downside. So we've had the 5 waves down. What is happening right now with the price action of Bitcoin, of the stock market, sorry, is that we are having this macro corrective wave from this, 2022 downtrend. I mean, look at this. This, of course, is one of those, relief rallies, ABC correction. The question is, for me right now, has this been A and this B? And we are starting here this C corrective move to the upside. Remember, C correction could easily go all the way down to the 4th wave, even lower, but overall, usually it is at least to the 4th wave, okay? So it does make a lot of sense that in this ABC correction, we could hit the 4th wave, which is round about the 4,300 points. Now, this is the moment that a lot of people are going to be very, very bullish, in my personal opinion, okay? It's just a personal theory that I do have here. Yes, we are breaking here the lower high trend line, as you can see on the chart. And as we have this price action to the upside, what is very likely going to happen is that people are going to get bullish. Bear market has been cancelled, no recession for the stock market, and this will be the level where we are likely going to create some kind of, exhaustion, double top, and then we're going to start correcting heavily, in my personal opinion. This is something that we are going to take a look here in the next coming days and weeks on the stock market, guys, but it just makes a lot of sense that this could be the situation here for the S&P 500, because just by breaking that trend line, of course, we cannot rely of the end of the bull market. And of course, like I said, this is the last lower high. After this lower high right over here, the next lower low is this one. So this is not a lower high on the macro, and of course, this is not a higher low. A higher low is created after breaking the macro lower high, which is this one at 4,300 points. As long as we're still below 4,300 points, this is still a very much bearish environment, guys. Okay, just something I wanted to point out there, that we need to be extremely cautious. That is going to be it for this episode, guys. I hope you enjoyed it. We'll be doing a live streams. We'll be taking a look at levels, of course, very soon, potentially tomorrow. Live streams, getting ready for that Monday preparation for our trading scenarios. I'm still holding this short position on Bitcoin. Almost got stopped out here just by a few dollars from that trade at 23,522. This was yesterday. Still going to ride this short position if I do not get stopped out. If I get stopped out at break even, of course, we'll be analyzing other scenarios on the live stream, of course. Thank you very much, everyone, and I will see you in the next one.